I'm thrilled now to introduce a fantastic group of guests who are going to be speaking to something that I personally find very interesting indeed, the idea of these legal frameworks and of course, compliance surrounding blockchain. So in this panel, we're going to discover how you can stay ahead in this quite complex regulatory environment and ensure that your blockchain ventures thrive. It is a technical subject, but I can't think of anyone better to moderate a conversation than Beth Buchanan. She is Chief Legal and Policy Officer for Nexum, and she's going to join us on the stage now with her guests. Please welcome them.
So thank you all for joining us this afternoon for this very exciting regulatory panel. I assure you that you will go away and learn something about a jurisdiction at some place in the world that you might not have thought about before. I am the Chief Legal and Policy Officer for Nexum Capital. I'm also a board member of the Cardano Foundation. And this conference has just been unbelievably well run, and I congratulate the Cardano Foundation for the great job that they have done. So when I started out in this field in around 2013, there were really not regulations anywhere. And there were a lot of companies that actually thought that there weren't any regulations or rules anywhere. And so it was a pretty difficult conversation at that time. But since in the past 10 years, we have seen global regulatory frameworks develop, or rather regulatory frameworks developing. And on this panel, we have representatives from different parts of the world. So we have Chengyi, who can speak about APAC. We have Robert Kopitsch, who will speak about regulations in Europe. And we have Irina Heaver, who specializes here in Dubai, Abu Dhabi, and other parts of the Middle East. So between these three panelists, they will cover the globe. So I'd like each of you to, give a little expanded introduction of yourself.
Shall I start?
Yes, please.
Ooh, that is very loud. Hello, my name is Irina Heaver, and I've been in the Middle East for 17 years. I've been here in Dubai 70 years, the early adopter of Dubai, as I like to say it. I'm very proud to be one of the first people to start working in the Bitcoin and crypto space here. Started running Bitcoin meetups in 2014, and people called me a crazy Bitcoin lady, and here we are. We are now all crazy crypto people, and I'm very, very glad to see that. I run a law firm called NeosLegal. We specialize in Bitcoin and crypto clients only, and that's all we do, and absolutely delighted to be here. Thank you so much for having us.
Thank you.
Hi, I'm Robert Kopitsch. I'm the head and co-founder of Blockchain for Europe. We're the European Trade Association representing the blockchain and digital assets industry. I'm working on blockchain and crypto asset issues since 2016. We founded Blockchain for Europe in 2018, and since then helped to create the MiCA framework at the EU level, which is currently being exported to a lot of places, among others here in the region. Spend a lot of time on also the fringe regulation around that, on AML, data, smart contracts, DeFi. And there's a lot of exciting things happening in Europe and in the Middle East. And that's why I spend also a lot of time here, because there's a drive of innovation here that is, I think, unmatched right now. And that's great because there's spillover effects also back into Europe or other jurisdictions. And I'm looking forward to the conversation.
Thank you. Chengyi?
Hi, everyone. My name is Chengyi Ong. I head APAC Public Policy at Chainalysis. Chainalysis is a blockchain data analytics company. We provide data, software, services, and research to governments, crypto businesses, financial institutions around the world, mainly supporting AML investigations as well as AML compliance. I think compared to the rest of the panel, I'm a relatively late entry into the blockchain space. I joined Chainalysis at the start of last year, and before that, I spent over a decade at the Monetary Authority of Singapore, working across different verticals, regulations, supervision, industry development, central banking, until I realized that some of the interesting policy questions could be best explored outside of the central bank and regulator, which is how I ended up in Chainalysis. Very happy to be here. Thank you for having us.
Thank you. Well, like Chengyi, I began my career with the U.S. Justice Department and spent the bulk of it there, and then joined a global law firm where I was working in the white-collar crime and securities enforcement group, which was something that I was very familiar with, and it seemed like kind of the same old, same old. And in 2013, I persuaded the firm to create a digital currency team so that we could best address the needs of clients in this emerging market. And one of my very first clients came to me because they were almost put out of business by a regulator because they could not register, and there were no regulations that really made it clear of how they would register to do business. And I realized that this is a space where you really need someone who has the ability to interact with the government and to speak to the government and to help these companies to succeed. So in the early days, things were really pretty unclear. In the last, I would say, 5 or 6 years, there have been regulatory frameworks created in various parts of the world, and they've gone about them maybe a little differently in certain places, but we do have a lot more than we had in the early days. So looking at what has happened around the world, would you say that there's any particular framework that might do a better job at providing regulatory clarity? I'm going to start with you, Irina.
And of course, I have to say UAE is doing a great job, because I genuinely think that, and I genuinely think that is the case. In the UAE, the first regulatory framework around virtual asset services providers appeared in 2018 in ADGM, a financial free zone in Abu Dhabi, and majors such as Kraken, for example, received licenses there, and there are more than 4 or 5 crypto exchanges operating out of ADGM there now. There are custody providers. There's Web3 VC funds. I mean, the ecosystem, the crypto ecosystem of the ADGM is absolutely fantastic. In December, there will be a huge event called Abu Dhabi Finance Week, and the last couple of days are dedicated to virtual assets, which is absolutely incredible, taking into account that our industry is literally 15 years old. So that's ADGM. Also, we have a Bitcoin conference coming from the US. It will be in Abu Dhabi at the same time. One of the Trump families will be there speaking, which the region is actually quite excited to hear. So that's that's Abu Dhabi. In Dubai, we have a dedicated regulator for the virtual asset space, the first and only one so far in the world. Just because you're the first or the only one doesn't mean that you're fantastic, but the fact that they have licensed over 20 virtual asset services providers over the last 2 years actually speaks volumes of the work and the regulatory framework which we have. Majors such as OKX and Binance are now headquartered here in Dubai and operating out of Dubai. Surely it speaks volumes when the largest tier 1 exchanges are choosing to base themselves here as opposed to, let's say, in Europe or in Singapore. With all my love for Singapore, I used to do a lot of work there in the shipping space prior to crypto. But also those exchanges, for example, are not operating out of the US because they are worried about the regulatory uncertainty and the regulation by enforcement over in the US. And hopefully things will change very soon with our favorite SEC head departing shortly and a new one coming in, because that's what the industry needs. The industry needs certainty, industry needs clarity, and a clear path how to register and how to operate. And I think this is what UAE has done fantastic. We have clarity, we have certainty. And I was just boasting to you, like literally 5 minutes ago, you can WhatsApp a regulator, ask a question, invite them to a private event to discuss things. Can you do this in other parts of the world? Maybe not.
Yeah, I have to say, I was with Kraken at the time they began the application process at the ADGM, and they were a very, very welcoming regulator who wanted to discuss with the industry the development of the legal framework, and they listened to the industry and took into consideration our comments in deciding what the final version would be.
And the ADGM regulator actually came from MAS, and now the CEO is now actually the CEO of Binance. So that just shows how closely the industry works together, right? There's, I think it's a great thing when you can talk to a regulator into their faces right away.
So we can clearly say that the U.S. is not leading here in this space, and we know that the ADGM and VARA are doing an excellent job. How about some of the other regions? Do you think that MiCA is going to provide clarity that is missing? Robert, I know you are very involved, or were very involved in the consultations and in the discussions leading up to MiCA. Tell us a little bit about that process, and how do you think it all developed?
I mean, it was quite a lengthy process, right? I mean, for example, when we founded Blockchain for Europe, there was no regulation or debates about regulation of crypto assets in 2018. One of the things we did in the first year of our existence was basically for calling for clarity and calling for regulation and a regulatory framework. And we pushed the European Commission, who is the executive body, to issue and launch regulation at European level to propose something. And then Libra came across, right? And then we had to add, apart from the VASPs or CASPs, as we call them in Europe, the C stands for crypto. Framework to add stablecoins, right? And it was quite a lengthy process. I mean, MiCA, when you look at it, it's like 240 pages or so. I think it could be shorter, but it covers the digital assets and blockchain space also in a way that allows for a lot of light touch applications, right? Like if you just want to issue a token, you just need a white paper. If you're CASP, you basically have a MiFID light regime, which if anybody's familiar with MiFID, it's like the securities regulation in Europe, which is quite a heavy regulation. It's a regulation, not a directive. That means it's directly applicable. There's no implementation needed at member state level. So that's also good because that means you can passport it in the whole block. So you have 500 million potential customers. Basically from day one, which is also a great thing. And when you look around, I mean, I spoke to a lot of regulators lately in this region, but also in Asia and in other places, and nearly every one of them looks at MiCA and tries to either build their framework, if they don't have one, on it, or take away things to be aligned with it. It doesn't mean that it's the perfect regulation, but there's a lot of basics in there that are very good and very right and light touch, and there are some, especially on stablecoins, that are very hard and tough, and I think could be improved. But overall, I think it's a very positive regime, and it enables you access to the largest economy apart from the US, right? And that's a beneficial thing. And once you have a regulatory or a regulated entity in one of the countries, you can basically operate everywhere in Europe, right? And it gives you also, I think, a good sentiment with other regulators when you say you have a MiCA license and you go to MAS, for example, or GFSA or ADGM, that they will say, okay, cool, then it's probably easy to onboard you. There's some approval basically, and also in the US. So I think from that perspective, it's a great regulation. I think there's always ways to improve it, and I can give you a long list of things that we can improve, and we're already working on them, but as a starting point, I think it's great. And considering the age of our industry, and Irina mentioned it, I mean, we went quite far in a short period of time, right? And I think as of next year, in Europe at least, you have a place where you can operate from and expand from and grow. And that's the most important thing, right? That you have legal certainty, that you can guarantee consumer protection, investor protection, and also ensure that there's market integrity and no abuse or money laundering and things like that.
The breadth of the MiCA coverage is definitely a significant aspect. It's really difficult for companies that want to do business in different parts of the world and they are licensed somewhere and then they can't figure out where else can we do business and how do we have to approach citizens in different countries. But to have access to 27 countries with one license is really pretty incredible.
But with that, I have a question. Imagine you're licensed out of Bulgaria, let's say. Would Germany accept Bulgarian standards? You know what I mean? Because not every country in Europe is as other country, right? Because like the northern countries consider themselves more compliant than the Eastern European countries.
I mean, as I mentioned, it's a regulation, and in a European context means that you have to get the license of one country, and once you have that, then let's take Bulgaria, as you mentioned it. If you have a Bulgarian license and you get approval from the regulator from Bulgaria, then you're allowed to operate in all the other 26 countries, right? Because
but
they
you
have
would still have to appear to the higher
like,
standards of MiCA.
Excuse me?
They would all have to adhere though to the same MiCA.
Exactly. Everybody has the same rules in place, so there's no discussion about the Germans have different rules or different nuances because they have the same exact rules in place in each of those countries.
So MiCA actually kind of levels the playing field then.
Yeah.
But we all know how it's all about the rules, but it's all about how you apply those rules. And with my experience as an attorney for 22 years, sometimes we see the applications of rules can be lax.
With directives, I agree with you. With regulations, it's much more difficult because you can always complain to the Commission and they will step in and justify either one side or the other, right? And it should be much easier, right? There will be nuances, of course. There might be separate, rules about how to account or how to open bank accounts in those jurisdictions. But when it comes to the application of MiCA to the entity that applies for the license, it will be always the same, right? The process might be different to get it, but the rules they apply has to be the same. And you can go to court about it, right? It's not that they can do this and say like, today we feel like this. It's like, no, it's this and nothing else.
So Chengyi, tell us a little bit about the approach in some of the APAC countries that you work in.
Absolutely. I think there is, to be honest, APAC is a huge region, lots of countries. And I think we do see quite a lot of heterogeneity still. There are certainly some jurisdictions where there's a lot more of that regulatory clarity. Japan is one, Hong Kong, Singapore, even Korea. I think what's interesting is the way that they got there. They all sort of took different paths. So Japan, for instance, is probably one of the first jurisdictions in the world to have custody rules. And that was really born out of the experiences with Mt. Gox, with CoinCheck, like big hacks where customer assets were lost. In Singapore, we really started with like a smaller, lighter touch regime under the Payment Services Act focused on AML and cyber hygiene. And over time, as crypto adoption has grown, we've really seen that regulatory framework expand to cover things like consumer protection. So it's been a journey. In Hong Kong, I would say they were relatively late to the game in terms of putting in place a clear mandatory licensing framework. That only happened and was brought into force last year, but that's like a full suite thing, right? I think what's interesting about these jurisdictions is that they have regulatory clarity, which is conducive to like industry and business, but these are not light touch regimes. These are very, very strict standards in many cases. And what I find interesting is that, certainly we talk about regulatory arbitrage, and there are companies that would try to go for the easiest point of entry into saying that they are a licensed entity. But you also have lots of players that are actively seeking out a jurisdiction with clear and high standards so that they can say that they have demonstrated that they meet that high watermark, and that's like their USP. So that dynamic to me is very interesting.
Mm-hmm. So we've touched upon some of the similarities and the clarity that has been provided through the new frameworks. Are there any differences that jump out at you between the approaches that have been taken in the jurisdictions that we've been discussing? I'm going to start with you, Chengyi.
I would say amongst the jurisdictions that we've been discussing, the broad contours of the regulatory frameworks are pretty much the same. The priorities are the same. You're looking at prudential soundness, consumer protection, market integrity. And the way that you get there, is broadly similar. If we're talking about things like the safeguarding of customer assets, we're looking at things like, cold wallet storage thresholds, cybersecurity requirements. So the broad shape of things is very similar across jurisdictions, and that's only going to be reinforced by the international standards that are now in place. But because every jurisdiction comes from a different starting point, every regulator has a different risk appetite. I think we see some differences in nuance and some differences in emphasis. So for me in APAC, Korea stands out as a jurisdiction where there is, I think, an exceptional focus on market integrity and the prevention of unfair trading practices. And I think that really speaks to the nature of the Korean market. There's a lot of retail trading activity. There's a lot of altcoin trading activity. There's been a lot of abuse and scandal in certain pockets of that activity. And so that's a clear focus of the regulators. In other jurisdictions, it might be something else.
How about you, Robert?
I think my experience is that there's a difference in the way how you approach decentralization or DeFi, right? I mean, we, for example, lobbied the European institutions to exclude decentralized finance entities from MiCA, simply because the market is still very nascent and needs to have space to grow, right? And nobody knows where it will grow to, how it will grow. And we don't want to bind it down and somehow harm the innovative process, right? And other jurisdictions took a different approach. I mean, for example, the ADGM launched a DLT foundations regime. They feel comfortable with that, and I think it got some positive feedback. There will be debates about DeFi more generally, right? I mean, when you look at the global debates that you have, they're very hostile because everybody's afraid of who's being held liable in the process, right? And what to do with unhosted wallets, etc., etc. And also the question of privacy in the context, right? Do we really need those AML frameworks, or can we achieve the same outcome somehow differently through technology? And I think that's the different approaches that you see, at least from my perspective.
MiCA is still evolving, right? There are still some issues that are yet to be decided, and there could be changes over time. Are there any outstanding points that you think are really important that have not yet been included in the legislation?
I mean, there's some clarifications, right? There's a question of fully decentralized, for example, in MiCA, which is basically the exemption for DeFi, right? So if you're a fully decentralized project, then you're exempted from MiCA. The question is now, what does this mean, right? And there's a debate about that. And depending on which camp you talk to, it's either like a certain type of nodes, or there's layers and levels of decentralization. It's something that I think that you will see in other fora as well, right? On a global level, regional level, national level. And the other things I think that need to be defined is also what to do with non-native stablecoins, right? So the majority of stablecoins are dollar denominated, and except for the US, I think everybody is not so happy about the fact that if you have a stablecoins regime that you basically bring in dollars into your country, and you see that in Africa, right? In Nigeria, there was a big uproar in the European regulation. You also have a limit to US dollar denominated stablecoins of usage in payment terms. And also here, for example, in the Middle East, you see this. The biggest concern for most of them is to have dollar-denominated stablecoins, because they don't like the idea that if this is being adopted, that it's all held in dollars and run basically out of Washington, right?
The U.S. really ought to take a look at this and realize that it's time for the U.S. to pass a stablecoin bill in the U.S. So when we look at doing business in different parts of the world, certainly the regulatory framework and the level of clarity is extremely important, but there's also other factors, right, to consider. So looking at the Web3 space, are there any jurisdictions that seem to be really well suited for Web3 projects? Chengyi, I'm going to I'll let you kick it off.
I think regulatory frameworks are just one part of it. A supportive government posture is one part of it. Like if you're any kind of startup, there are certain things that you would probably look for: a favorable business environment where it's easy to set up sources of capital, access to smart capital in particular, access to talent in an economical way. And so, like, I think, I spend a lot of my time in Singapore and in Hong Kong, and these are both international financial centers. There's a lot of government support for startups. It's very easy to set up a business. There's access to venture capital funding. You can tap on regional sources of talent. And so those are sort of like fairly good places where you could headquarter a business. Of course, as you expand, where you place your operations, you're probably going to have a lot more factors behind that.
And I would, of course, lobby for the UAE as the crypto capital and the Web3 capital of the world. Inshallah, soon Bitcoin capital of the world. Because it is very important. All the things that Jenny mentioned are, of course, very important, but talent and the ease of relocation is very important. It's quite not easy to get a residency in Singapore, and it takes 3 days to get a residency in the UAE, even shorter if you run around faster. So and talent is moving to the UAE. They're relocating the entire families to the UAE. We have the best schools, we have the best hospitals, we have a fantastic weather, except for 3 to 4 months in the year, and in that time just come and visit Europe or Singapore. Beautiful time. So a lot of things are really, really important when you're setting up a Web3 company. Yes, regulations are important, but we are humans after all, so humane living conditions and comfortable living conditions are very important. Safety. So a lot of, where I live in Switzerland, a lot of people ask me, oh, you're a white woman and you live in the Middle East, it might be so dangerous, how do you manage? There could not be a safer place in the world than UAE. Dubai and Abu Dhabi are ranking the safest cities for women and for people in general in the world. So of course, a lot of talent, female talent is moving here. And another thing is, what is very, very important is the access of capital, and a lot of VCs are moving here as well. I mean, look at the conferences we had over the last 2 weeks. You come here, you network, you make connections, you make deals right on the spot. So of course I'll advocate for the UAE as the Web3 capital of the world, but I am very biased.
Well, this is certainly a tremendous endorsement for the UAE. And Robert, you're going to have a tough time because we've heard some, pretty positive things about other jurisdictions. Tell us why the European jurisdiction might be good for Web3 projects.
I think it's very simple, actually. It's a large market, so you have a large consumer base. There's a lot of capital still there. The risk appetite is not as high as it should be, in my opinion, but that's probably due to the circumstances. In Europe with, first of all, Ukraine, secondly, also certain politics and certain governments we have in place, and a number of other reasons. But I think from a living quality perspective, location, it's still great. It could be, and it always depends on what you look for, right? I mean, if you want to live on the sea, there's a lot of places in Europe where you probably feel comfortable about, and that also have good places for talent, good frameworks in place, good living standards. I mean, Portugal became like a crypto hub in Europe over time for exactly that reason, right? A very open-minded government, great place, good food, nice weather, and others. Malta is one, Cyprus is one. You can go to places in Italy. You would be surprised how many crypto-affine people are there. Italian government is very open-minded nowadays. It took them quite a while, right? And there's a number of financial hubs: London, Switzerland, Amsterdam, Paris. I mean, they're still major in this place. And I think the connection to the US also plays a big role, right? A lot of the investment comes also from the US, and there's an established bridge to go back and forth basically for companies. It's easy to establish And yeah, I mean.
So MiCA certainly has tremendous advantages with the passporting, and that seems to be a very, very strong aspect of the legislation. But some have been critical, though, about the compliance burdens that have been included in MiCA, and that if you're a big financial institution, it might be a lot easier for you to comply with that. But if you're a small business, do you think that any of these compliance burdens have gone too far? I mean, do you see that disparity between the large established financial institution and maybe a startup?
I mean, depends what you offer, right? I mean, if you're a CASP, then you have tough regulations, right? But you're also running a business that is very profitable. So the answer of a regulator you will get is like, look guys, if you do your business properly, then we're talking about peanuts here. This might sound a bit arrogant, but if you look at how CASPs operate and the margins they have, I think it's a fair assumption. If you're a DeFi project, you're not regulated by MiCA anyway, right? So compliance is basically zero. If you do anything else, there are certain rules. If you're a level or layer 1 protocol, layer 2, layer 0, there are certain requirements to issue the token, right? You need to have a white paper and some sustainability requirements that you have to adhere to. But overall, I mean, I understand where this is coming from because the piece of legislation is just massive. But when you dig through it and see what applies to you, unless you're a CASP, you're pretty well off, actually.
Could I mention another thing? Taxes is very important. So Italy, for example, in their wisdom has introduced 42% or 45% capital gains tax on Bitcoin holdings just recently. And let me just remind for all of you, just in case you forgot, 0 capital gain taxes, 0 personal income taxes here in the UAE. So
yeah, taxation is definitely a relevant point, right? I think there's like 5 points. I mean, you mentioned 4, right? And taxation is definitely that makes a difference. But you know, you have 27 member states you can choose location from. So I mean, I'm actually not here, to be honest, to shill Europe to anybody here, but it's funny that you asked me that because I live in Dubai myself, right?
Exactly. So here we are. So somebody's shilling Europe and living in Dubai. I think the debate is closed.
I was forced to, so I'm a proud European, but I also love living here because it brings a lot of smart and talented people having a great environment to grow something, right? And to be honest, it's a global industry anyway. You choose your place you feel most comfortable with. I mean, some people find that in Singapore, some in Switzerland, some in Dubai, or at home or in the US, right? I mean, and you can travel anyway. So I spend a lot of time in the plane, unfortunately, or luckily, depends on the day. And this is just a hub where we all meet in a way. And ideally, the regulation at some point will also look at minimum standards that we all agree to. And there's a lot of debates. And I think the faster ones will succeed. And the UE did a great job so far to be on the front of all of this.
But I would mention that 16th century would have been a great place to live in Europe. The Industrial Revolution would have been a great place to live in London. Now is the great place to live in the UAE. This is where the Web3 revolution is happening.
I'm just going to say 0 capital gains tax in Singapore as well. But no, I think like it's a whole package, right? And you look at different factors, and different people will have different, will weight those in different ways. So yeah, like.
So yeah, getting back to one of, I know all of your favorite topics, compliance. With the additional, compliance requirements that are finding their way into all of these frameworks, do you think we may have gone too far in any area? And is there a way to create de minimis thresholds to maybe reduce KYC burdens?
I mean, I'm happy to answer that. I think there's definitely 2 places where we went too far, and the first one is on stablecoins. I think the level of innovation that is allowed in most of the stablecoin regimes around the world is, I think, very low. So it's quite limiting. It's very prohibitive, very protective of the banking sector. I mean, for good reasons, if you're a central bank, right? I mean, they have an interest that they can oversee this monetary policy, self-sovereignty, government influence, and so on, right? But if you want to innovate, like through algorithmic stablecoins, for example, or any other type of more innovative version of money, like programmable money, right? There's this debate about CBDCs and so on. I think it could be more open-minded. And the second one is definitely AML, where I think nowadays we're so terrified of financial crime that we're strangling actually the ability of our own citizens and consumers to actually use their money the way they want, right? I mean, we basically, instead of trusting the consumer or the citizen and setting up rules that protect them, we basically protect the consumer from himself, which I think is the wrong approach. And we're terrified in a way from what they could do rather than actually let them do and try to educate about what makes sense, what protects your money, what protects your financial holdings, etc., etc. So I think the trend needs to be reversed, that we also use the technology that we have to achieve outcomes that enable technology, safeguarding funds of consumers and investors, right? Without having to basically create like a surveillance state that we're heading towards to in a lot of places, and that's very scary, especially when everything's digitized, right? There might be an entity at some point that can basically shut you down by will, and that's a terrible thought, I think.
How about the UAE? Are there any places where you think the compliance requirements have gone a little too far?
Well, you know this much better than me. In the 80s, the banking industry of the US sued the US government because of the Banking Secrecy Act, and unfortunately they lost. Unfortunately for all of us, here in 2024, we now have those, you know, this ridiculous KYC AML requirements in all the countries that touch the US dollar, that touch the SWIFT transfers, because you don't want to be shut down from the US dollar sort of a trade, and maybe one day the US banking industry will try their luck again, and we will not have a situation where, yes, the banking is now so restrictive that people cannot get bank accounts. That is, I really think that ownership of your own money is a human right. I earned this money, I want to be able to spend it, but it's getting harder and harder to have access to banking and to your own funds. And we as a law firm, this is what we deal with every day. We have honest, good clients who are absolutely unable to do the simplest things because of some documentary requirements.
Have you had much success in, on behalf of your clients, working with financial institutions to sort of unravel some of these problems?
No. Financial institutions in the UAE are very, very order-based. There's a box that they need that needs to be taken, and there's certain documents that need to be submitted, and there's no way around it, which is a great thing because we don't want, you know, Wild West. But it is a little bit too strict in some cases, I believe.
So let me turn to technology. With these compliance, you know, increased compliance requirements, some of the best ways to meet this is through technology, new red tech. Are there any things that you've seen, Chainalysis, that might help certain companies to comply with these compliance rules?
Well, going back to the point about AML burdens, I think one thing that we're leveraging already, that Chainalysis is trying to leverage, but that overall I think as an ecosystem we could leverage more, is this idea of the transparency of the blockchain, right? That's what drew everybody in the first place. With regard to financial crime compliance, there's a lot that you can do in blockchain with regards to understanding the source of funds, direct and indirect exposure to illicit activity that you could not possibly do in fiat with that level of ease. Likewise, I think there's a lot of ways that we can use on-chain data to potentially lighten some of the more nuts and bolts aspects of that compliance burden that a lot of like crypto businesses will face, and any kind of regulated entity will face around things like reporting requirements, validating and affirming sort of like how much you're holding, the value of the assets that you're holding on behalf of customers. I feel like, so firstly, blockchain analytics, very important for AML compliance. Everybody note that. Secondly, I feel like, again, public and private sector could work a lot more closely to find ways to leverage on-chain data to make regulatory compliance as well as supervision more efficient.
Well, we are definitely not going to get through the long list of questions we had, but if I give you all 30 seconds or so for final words. Irina.
Regulations are important, compliance is important, being in a place which is welcoming, where the government is welcoming the entrepreneurs is even more important. So, welcome to Dubai.
Well, if we were going to take a vote in this room, I think maybe you might be winning.
It's easy to win. I mean, it's not even a competition.
Robert?
I think one of the most underestimated things about regulation is the impact of it for a lot of companies in this space, right? And it sounds a bit weird to many probably that already deal with it, but a lot of the companies, especially when they come from a very strong tech background and not really dealt with regulation before, is how much impact it has on your business and how much of a positive driver it can be if you really deal with it in the right way, both from a regulator side but also from a company side, right? It can be a real enabler also to grow. And that's one of the things that I always tell at the end is talk to your regulators or join a trade association in your region and participate in the process, right? Because the biggest risk we have is the misunderstanding and the misperception of the regulators towards our industry, right? Because they are the ones that holding the pen and they're having a certain picture about what we do. And if the picture is not in line with reality or contradictive or even hostile, then this will be very bad for business, right?
Chengyi, I'm going to give you the final 30 seconds.
Thank you. So I fully agree with what Robert has said, and I think this dialogue with regulators, being active in the regulatory process, it's particularly important in crypto because there are so many niche aspects of it, the technology, the way that business models work, and regulators that are used to dealing with traditional financial markets, they're not necessarily well equipped at the outset to regulate crypto. And that's why that dialogue is really important. And secondly, I think we should not think about regulation as something that is static. It is really a living thing. It will iterate. And that's why that continued dialogue is especially important.
Well, thank you so much, audience, for sticking with us, particularly right after lunch. And I hope that you learned something. Panelists, it's been such a pleasure working with you. I feel good to know that in any of these jurisdictions, if I need to know who to call, I know where to go. Thank you so much.
Thank you very much for having us.
Thank you.